For May, without sounding like a broken record, markets were continuing to watch inflation, and inflation numbers printed higher than expectations in a couple of markets, which led to another bout of volatility like what we saw through April. So for May, equity markets were relatively positive, and there was a difference between developed markets and emerging markets and large cap and small cap. So the more core parts of portfolios, so the larger cap developed markets performed the best in the month, probably on the expectation that those businesses and broadly, generally, those businesses will be able to withstand higher interest rates for a longer period of time than some of the more sensitive sectors. From a fixed interest perspective, the RBA at the start of the month released their latest cash rate policy, which was unchanged. That was clearly within expectations of what markets were thinking. From a longer term perspective, bond yields were relatively flat for the month, certainly in Australia. They're a little lower by the end of the month for US, which was positive for bond investments. And again, that's the challenge or expectation setting from markets of what they think interest rates will be over the medium to longer term. One of the interesting announcements in the month was BHP's proposed takeover of Anglo American, which was a significant copper producer in the global economy. So BHP clearly have a bit of capital to allay or to invest into opportunities in the marketplace, and see strategically some of the copper assets that are within that business as being valuable for what they think is the future of commodities and future of commodities that will be in demand. So it was an interesting announcement. There was negotiations that were undertaken between the two businesses. Unfortunately, they didn't come to terms at this point in time. Yeah, so an example in the REIT space is Goodman Group. Goodman has been one of the stronger performers in the REIT space for a number of years now. It's an an industrial business, so basically sheds in the areas where there's distribution requirements. So you think of the Amazon sheds or the Coles sheds and those that house a lot of the products that need to be distributed around the country. They're moving into data centres, so they've seen a bit of a repurpose potential for some of the land banks that they've got both here and overseas into data centres, and clearly there's significant demand required or expected to come through for data centres in future with the technology trends and AI trends that we're seeing in markets, and so that they've positioned themselves very, very strategically in those sorts of assets, which played out well for the transition to the online retailing economy, and probably plays out quite well for what is the future of technology and technology support requirements. June, we've got two of the central banks for Australian investors, so we've got the RBA and also the Fed in the US, which will be clearly watched very closely. Lots of data being poured over by the economists and the bankers at those central banks to understand what's going on and give some insights as to what their decision making is with regards to interest rates. The expectation probably for most is that interest rates will remain on hold at this point in time. While it may add a little bit of volatility, it's clearly of interest for those that are interested in markets to know what the central bankers are saying and what their outlooks are.